What's going on, everybody? I am here with Nicholas Bratto. So, Nicholas, this is the first time we've talked, and where in the world are you talking to us from?
Yeah, so I'm in the Metro Detroit
This guy's in Detroit. I'm in Chicago. A little bit of a rivalry here. You don't live in one of those $1 houses I saw people selling, do you? The old crack houses that you could buy
area. No,
for a
I
buck.
wish. I've thought about buying one though, but no, no, in all seriousness, nope. I live in a good area. Metro Detroit, like I said, much like Metro Chicago.
I noticed you. You're a writer on Seeking Alpha. See you around X. You've popped into one of my live streams, and it's because of something you said that we'll get into in just a little bit. That I love that you said this because I've been doing this for a lot of years, and I've never heard anybody put it that way. But before we do all that, who the heck are you? Like, how old are you? What's your quick little backstory there?
Yeah, Nicholas Bratto or Nick Bratto, I go by both. Um,
Nice Jewish
I'm
boy, huh?
no, no, not Jewish. Nope, I'm actually I'm Assyrian and Italian mixed, so yeah,
I
not
tease, I
Jewish.
tease.
Okay, a
Hey,
lot of
Nicky
people think I might be
Brado,
Jewish.
it's
Yeah.
Nicky Brado over here. Sorry, man. Go
Um,
ahead.
but yeah, 28 years old. Yeah, from Michigan. I'm an engineer by day and financial content creator by night and weekends and all other parts of the day, I'll say. So yeah, I'm a writer on Seeking Alpha, and then also yeah, I'm very active on X, Twitter, and then I have my own Substack as well, where I also kind of do more broader personal finance articles and such.
Beautiful. I will link to your Substack and your Seeking Alpha and whatever else the heck else we're gonna link to. So, 28
Yeah,
years old. You've got.
I'm also on Connect. It's a newer app, and I'm newer to there as well. But you can, yeah, people can connect with me on Connect as well. That's like a
Wait. What
consulting.
what app is that?
Oh, it's called Connect. It's a very new app to the market. Yeah, Connect.
I'll
It's like a
say.
consulting app for yeah. You can send people texts and you can set up video meetings and stuff like that. So I use it for personal finance, consulting, and then also continuous improvement consulting. That's more of like the engineering side of my expertise. So that'd be more for someone's business, but
Breaking news. Look at this. New apps dropping. So, did you go to college? I'm assuming you had to go to college. You can't do like I did and just go in the Navy and then just start, being an engineer right out of the street, can you?
I have met people who do not have engineering degrees, but they are engineers. You get enough experience, and really just comes down to knowledge. But yeah, I did go to college. Yeah, I have a couple undergraduate degrees in mechanical engineering and engineering mathematics. It's called from U of M Dearborn, and then I have a graduate degree in systems engineering from University of Michigan, Ann Arbor, the main campus. Hold some certifications as well for continuous improvement, problem solving. Again, more of that engineering side of things. I hold no financial certifications. Fun fact.
Fun fact that makes two of us. So, just take everything we say with a giant heaping grain
Yes.
or grains or granules of salt, whatever you have to do. But well, I guess we can get into it. We won't keep the people waiting. So, the thing that you said that was on a live stream that I absolutely love is now you've got over 20. I'm teasing it, right? People are like, hey, you've written over 25 articles on Seek and Alpha, and I think most
Yeah.
of them are on ETFs. Is that kind of your thing? Is exchange traded funds?
Yeah, I mean, I wouldn't. I'm not sure if it's my thing, but I definitely a good portion, probably at least 50% are on ETFs that I own or speculate on owning.
Okay, and if you don't know, if you're new to all this, hey, sometimes you're new and it's okay. We love you. We're happy to have you here. But an ETF is just a basket. Imagine like a basket, a nice little wicker basket full of different kinds of stocks. Some have 30, some have 4,000. It's pretty wide ranging what they can have in these ETFs. And we were talking about, I think SCHD. I think it was SCHD Stan.
Yeah.
Shout out, man, if you're watching. He was on, and
Oh, I love his
you had said,
content.
I got to have that guy back on. He's good stuff. But an ETF, the thing that you need to know, and if you're watching and you're new to this, it's okay because I hadn't really put it or heard it put the way that you had said it was that you're not buying so much what's inside the ETF. I'll let you finish it. What are you buying?
In my view, you're not so much buying the holdings of the ETF, oh, like you are, but really the reason people should be selecting ETFs is for the methodology. And, ETFs are really a thematic approach to investing. Yeah, like you said, ETF, big basket of stocks, and there's ETFs with 30 stocks all the way up to 100, 500, even. Yeah, now there's ETFs that cover, entire indices like the Russell 2000. That's 2000 stocks. When I'm looking at ETFs, I'm really interested. I am interested in the holdings, but ultimately we cannot control the holdings that are in ETFs. That's all controlled by the methodology they use. And when you're trying to compare different investments, I like to look at the methodology, how much conviction I have in that, and also, of course, the results, the returns, and depending on your style, if you're a growth investor, value, dividend investor, I'm more of a dividend investor myself. That's what you're really looking at to compare different performance levels. Make your selections.
One of the things I want to point out is SCHD is one of the ones that had blown up. I mean, everybody was on SCHD about a year ago, and I don't know. It seems like some of the luster's come off a little bit, but it's a great example because one of the stocks, and this is one thing you really have to understand when you're buying an ETF like an SCHD. A year ago, one of the top holdings was Broadcom, ticker AVGO. And Broadcom, with the whole AI craze, has just, it's probably justified. It's run up in price. And because it's gone up in price, its dividend yield has come down. And it was below the threshold to be included in SCHD. So it got booted. So if one were buying SCHD because they wanted exposure to Broadcom, a year later, they're probably, okay, wait a minute, Broadcom's no longer in SCHD.
Yeah.
What the heck's going on here?
I guess to that point, the other side is sometimes we see, say you really want to own Apple and Microsoft, and you see them in these different ETFs, but that is not a reason to buy the ETFs because, like you said, they can drop off at any time when they violate the rules of the fund managers. So it's definitely something to look out for.
So what is one of your favorite ETFs? What's something that you're a big believer in?
Obviously, SCHD, it's one of my biggest positions, and one I have high conviction in. The other one that's more recent to my portfolio is DGRO. And that one, it took me a little bit of time to really get the conviction in it, but that's another ETF I really like pairing with SCHD. And I actually wrote an article, and I released tons of my articles on X and Substack completely for free. You can gift articles, so I gift it to the whole public. You don't need to have a subscription necessarily. But I did write an article that kind of walked through, took me 2 articles actually, but walking through how I determined to pair DGRO with SCHD and why I thought it's, one of the best combinations for someone who's really targeting, dividend growth, sustainable dividends, to help you sleep well at night.
Well, we all want a swan. That's, by the way, if you're new to, again, a lot of people, I'm assuming, are new to this and they don't get the acronyms. Some people say swan, sleep well at night, or PADI, projected annual dividend income.
But so SCHD, by far one of my favorites, and DGRO as well. Those are, some of my largest positions in my portfolio. I guess, SPY, probably my favorite S&P 500 ETF, mostly because you can sell covered calls, cash secured puts. Not that you want to be doing that often, but as a way to manage your risk, I like that. I'm actually a pretty risk adverse guy, and I'm very into risk management, risk analysis. So for an S&P 500, I like SPY. But BOO is also a really solid one, a little bit lower expense ratio for those who are not so much interested in maybe selling options and such. But those 2, SCHD, DGRO, definitely my 2 favorite ETFs right now.
Yeah, for full disclosure, I invest in SCHD, and because I still want a little more tech exposure, but we always talk about circle of competence. Warren Buffett, Charlie Munger, famous for saying you have to know the edges of your circle. And what I'm not very well versed in or knowledgeable is high tech. I'm a welder. I didn't go to college. So again, take this all with a grain of salt. But for me, it's difficult for me to understand, and I've tried to look into Intel, and I always say, I don't know what makes an Intel chip different from an NVIDIA chip, different from an AMD chip, or different from a Qualcomm chip, and which makes which better. But I do know the difference between a Frito-Lay chip and a Dorito chip and an Utz chip. So when we talk about those chips, that's totally in my circle of competence, and I can understand that. But because I want more of that exposure to tech, and in my 401k, I do have broad based market exposure, but I'd like a little more just for the heck of it. So I went SCHG, which is growth. And at the tippy top of those, it's a lot of the tech stocks. So because I'm not smart enough to pick which ones, which is another great way that you can use ETFs, right? So what do you
Exactly.
think about if you were to say want to play like the Palantir is one that I struggle to understand Palantir too. I'll admit it,
Yeah.
but data security, I think they do stuff like that. I think there's ETFs like HACK or BUG where you could just buy a basket of all of them and you don't have to worry about picking the right one. So, what do you think about thematic ETFs or using ETFs to kind of, you're outside the circle of your competence? What do you think about using some ETFs to help mitigate some of your own knowledge gaps?
No, I like it a lot, and it's certainly better than just randomly picking tech stocks that you heard of on the street or your friend or grandpa told you to buy. That's not buying individual stocks. I used to do that 10, 12 years ago, but as I've learned, the only time someone should really be buying those individual stocks is you have to know how to read financial statements. So, income statement, balance sheet, and cash flow statements to really understand what you're buying. And you really have to stay on top of it. And that's why it's so hard to compose, unless you have a lot of time to manage your portfolio. Building a portfolio of even 30 stocks would be incredibly difficult to keep up with. How are they doing? Should I add more to this position or not? And that's why, in this modern time, it's really awesome that they have automation, automated investing, automated rebalancing. But yeah, like you're alluding to, is the thematic ETFs. I personally like more, go heavy into because part of investing, I think we all get really in the weeds, especially us in the financial content world. We compare returns, but 0.5%, 0.2%. That stuff's important to keep us honest, make sure we're making the right choices. But part of investing is really an emotional thing, and you have to have conviction in what you're investing in. And sometimes it's more important to get your money invested in a decent fund than to not invest at all or to just randomly gamble and randomly pick stocks. You really want to be invest early and often, as they always say. So I really do like thematic ETFs a lot, especially when it plays to kind of, what's your goal? Like you're investing in SCHG, so you want that high growth exposure, but you don't have time to, and hardly any of us do. We only have so much time in this life to figure out, okay, I'm going to be an expert in AI chips. You're probably not. So you're better off kind of going with a thematic ETF like that, or like you said, I just want the growth. Give me the growth, and that's what you're doing. You're getting your money working for you. There's other people and other companies that they will take your capital. They're the experts, and they'll get your money working for you. So I guess that's my take on thematic ETFs. Big fan.
Yeah, but you highlight a great point is that you really need to at least understand what you're invested in. My wife, we're doing a little experiment with her. We open up a Roth IRA for her, and it's only got one holding, which is VTI. It's the total investable U.S. stock market, and we're just doing $50 every Friday. That's it. I don't care. It's at all-time highs, $50. If it crashes,
Yeah,
10%, which is normal for the stock market to pull back. Usually, in olden times, it used to pull back
absolutely.
10%, completely normal. But and she understands it. So before we invested, and she doesn't follow any of this like at all. I've tried, believe me, I've tried.
I can
She
relate.
I talked to her about investing, and she says, okay, I can tell she's drifting off, and she's like, maybe you could go
Sure.
outside and talk to the squirrels about it or something. But anyway, so I told her, I'm like, VTI, what is it? And she says it's a little piece of every U.S. stock that's publicly traded. I'm like, they're perfect. I got you to say that and understand
That's
it.
all
So
you need to know.
and it's funny because her parents, my in-laws, they sometimes think that in all investing is gambling, and it's like, no, it's only in gambling if you don't know what you're doing or what you're buying. But when you're
Right,
buying the
exactly.
entire US stock market, itty bitty little sliver of every publicly traded US stock, you're betting on America. You're betting on that
Yeah,
America's going to keep growing, innovating, using technology. And it's just a beautiful thing when you can just have your money grow at, what is it, 9, 10% a year on average.
Right. No, well said. And yeah, especially in this modern age. I mean, I can still remember when my grandfather buy me a little bit of stock when I'm a child, and it's on a piece of paper. It wasn't even not even using computers, right? And then nowadays, anyone who's got a cell phone, if you have a job, you can open an account and invest. It's so accessible for every American to be a part of the growth of America, and companies you believe in, companies you spend your money at. You can invest directly in them. Click of a button, no matter where you are in the world. It's one of the most. It's a very beautiful thing in our economy and in our society. Compared to real estate and business is a lot more risky, a lot more work, a lot more capital. And real estate, if you're doing real estate investing, really it's capital and also the skill set and knowledge. But stocks, you don't need as much knowledge to pick a good index fund or ETF that you believe in.
Well, and it's like I used to see people on Twitter all the time. And it's not in my feed that much, but it used to give you the feeling like, hey, if you don't invest in real estate, you're freaking idiot and you're not going to get financially free and you're a moron. And I'd be like, hey, can I buy one of those $1 houses in Detroit? Does that count? I
Yeah,
can buy some property. I could take the kids there. We'll check it out. Maybe we'll, camp inside amongst the crackheads and the splinters and the squatters. But anyway,
yeah,
the point is that there's more than one way to financial heaven. There is just, you do what works for you. And like I've told my daughters, before we started, I have a 15 and a 16-year-old as of this recording daughters, and they could care less about investing. I talk their ears off
right.
about it. And I apparently, you got to watch out, people. Kids have long hair. They got earbuds in. They're good at pretending like they're listening to you, but they're not listening. And yeah, it's a different time and age. But anyway, I told them, I'm like, look, you don't have to like investing, but you do have to do it if you want to be financially free and have money in the future to do what you want to do with who you want when you want. Kind of like living life on your own terms, right? So I heard you touch on it. What are some of your ways that you go about? And I've heard, people say automating is a cheat code to financial freedom. So what are some of the ways that you like to automate your investing?
I I was on and off with actually automating my investments for over the last, I would say, 5 years. I was on and off, depending on, I was getting married, buying a house, and all that stuff. So I would turn on, turn off. Where I would think, no, I've got the discipline to, I will pull the money and do it myself. And what I found out, what I realized, I actually wasn't doing that. I didn't have that discipline. So yeah, I've since, the last couple of years really gone back to the automation. Much like all my bills are automated, your investing should be automated. And how I do it is I invest every week. I invest, a certain amount of money. I like Mondays. I like Mondays, and I select my investments, my ETFs that I'm buying into, and I just make automatic purchases every single week. Does it for me automatically. And I like to just do like how I really have it set up is, paychecks and all my money comes in the checking account, and then I have an automatic transfer that I set like a good threshold, not going to stretch me out too much, but something I can comfortably do every month. That automatically gets sent to my brokerage account, my taxable brokerage account that buys once a week. I split it up by four, whatever I'm buying that week. Um, and I guess similarly for like 401k, right? I'm a W-2 employee. That's most of where my income comes from. That's all set up also through the automatic investing. That just comes out of your gross paycheck, right, before it even hits you. And that's the nice part, I guess. You don't even see the money come. You just get your paycheck and you've already been invested for your 401. But that's how I do mine, right? So I have automated investing for my 401k, for my employer, and then automated investing for my taxable brokerage account, which I'm a big proponent of. Might be a little controversial how I guess, manage my stuff. And, one more thing about how you're setting up the automated investing, setting it up is super easy, right? A few clicks, select your funds, really easy to get going. I think the hard part for a lot of people, including myself for a long time, is you have to have that conviction and understanding of what am I automatically investing into every week or every month that I feel comfortable, scaling my portfolio to a really, substantial size. And that's, I think, the hardest part with the automated investing is actually figuring out what am I going to automatically invest into.
I was thinking as I'm hearing you talk about a W 2, and I was like, we got to get into why you're such a loser that you have a W 2 and you work for somebody, because everybody knows that you have to be self employed if you want to be a winner in this world. And that's something that I love to push back against, because I've only ever been a W 2 employee. And hey, we're more than three-quarters of our way to a net worth of $1 million, which I'll be the first one in my
That's
family.
awesome.
So that's and it didn't even really start in earnest until my mid 30s, which is just all those lost years. Hey, at least I have some expensive memories that I paid for. Those will be with me, and
Sure.
hopefully I won't have Alzheimer's. They'll be with me till the end. But yeah, so I had to say that jokingly, because as soon as you said W 2, I'm like, ooh, that's a dirty word around FinTwit, W 2. And it's like
Yeah.
that meme. It says I quit working 40 hours for an employer so I could work 100 hours for myself. That could be a trap. Then you could get in the whole, prison of a business prison of your own making. And but either, and then also the last thing, you like Mondays. I love that, because there's a punk band, I don't expect you to know who NoFX is, and they have a song about why they love Mondays, because the weekend comes, they're in a punk band, right? So during the weekend, everybody's out. They can't go to the movies, they can't go shopping, the streets are crowded, all the stores are crowded. But Monday morning, everybody's back at work, so they can move about freely. Do you invest in any individual stocks? And before you answer, you did touch on needing to know about financial statements, which is something I've learned about. I'm still learning about. I enjoy reading through them. Maybe it was dropped on my head as a kid and something's wrong with me. I don't know, but I enjoy it. The only problem that I'm finding is it doesn't tell you exactly what's going to happen with any business into the future. You just see where we've
No.
been,
Right.
where we are, and you can read about the promises that the business is making or where they want to go. So, with that being said, do you invest in any individual stocks that you'd like to share?
Yeah, so I do. I won't share all of them because kind of planning to do more of a, maybe a portfolio review one day. And it's a good question because I still debate sometimes, should I even own some of these individual holdings that I have if I'm, struggling to keep up. I really try to practice what I preach. But yeah, some of the holdings I do hold individually. Realty Income, I do hold a decent position with them. Apple stock. This one probably people won't know. Maybe they will. UWMC is the ticker. The company's UWM Mortgages. They're kind of like a rocket. They're a mortgage lending company. I cover them on Seeking Alpha. I'm like the only one that covers them, but I do invest in them as well. And those are some ones that, yeah, I definitely feel comfortable sharing.
It can be fun to do that too. And I would say, just my opinion, that's all that this is. If you're not sure, one of the best ways to learn about the stock market is to buy individual companies, because you don't learn anything about you don't learn a whole lot about investing when you buy VTI, when you buy the whole market or a basket of stocks. You
Right.
learn a whole heck of a lot when you got real money on the line, and you put it into a Nexstar Media Group and you've studied the business and analyzed them. And just random thought here, one person might think that they are a fantastic business, but the market disagrees and the stock price
Yeah.
hasn't gone anywhere. So it is, yeah, I'm kidding, because that's me. I'm just, I'm saying me. So I'm at a point
No,
right now where I'm
it's
learning. I'm
true.
learning the lesson. I'm learning the lesson of the stock price is not the business, but it's reflected of what the market thinks the business is worth. So it's a crazy game. It takes a lifetime to figure out. Warren Buffett's been investing for over 80 years. The guy still makes
Right.
mistakes, like he invested in Paramount and lost a whole heck of a lot of money. But
Right.
that's just something that's said to about you said. It is a lot riskier when you invest in individual stocks.
Yeah, definitely a lot more risk, more upside though, for sure. Even if you know how to read financial statements, you're right. It does not indicate really no certainty about what that stock price will be in the future. If it did, there would already be, a single fund out there that someone figured out we'd all be investing into that. And that's the thing with the whole stock market. I try to tell people because people ask me all the time, what do you invest in? What should I buy? That's the first question I always get when people find out, okay, this guy's really into stock. What do I buy? What do I do with my money? And I'm like, man, honestly, first thing I always start off with is just S&P 500, something safe. I can't
I
tell.
always tell them,
I don't feel
50% of your savings into GameStop call options. Easy. Don't do that. I
yeah,
don't.
maybe I should start doing that. But yeah, people are always asking, and it's not something like you said. It's just like gambling. If you're just gonna guess what you're gonna invest into, yeah, you really have to understand what you're buying, and it's not something to just throw your hard-earned money around trying to get gains. Because that's coming from me. I used to do that, right? I really thought I knew what I was doing. I really didn't. I just like the idea of, oh, I'm gonna have some natural gas company in my portfolio. I just like that. I'm diversifying, but I mean that's crazy. You don't even understand the. I don't know anything about the business or their numbers. So. But on the flip side, like you said, investing in ETFs, you do kind of, you're not going to learn so much about the companies unless you're really following. You're, again, just kind of outsourcing all that. And that's okay. For a lot of people, they don't have time. They don't want to, they just want their money to grow. They want to retire one day. Maybe they want some financial security. So yeah, hopefully I answered your question.
I don't even think it was a question. I think I was just blabbering on, and then you just picked up on it. But yeah, it's funny,
I
man.
talk a lot.
So you want to buy natural gas. You don't know what you're doing. You're going to give yourself indigestion. And then you buy some Tums.
Yeah.
You're going to need Tums, which I think is a Procter and Gamble product. So there you go. But you can't just buy what you see all around you, because you could have bought Blockbuster. So I wanted to have a little fun with numbers here and talking about businesses that are added and subtracted. One of the indexes everybody knows about is the Dow Jones Industrial Average, the DJIA. And that's
Right.
just 30 businesses that are supposed to represent a good swath of commerce in America or something like that. But it's kind of funny because one of the stocks I have owned for a while was kicked out. So check this out. Fun with numbers here. This is on August 31st, 2020. ExxonMobil was kicked out of the Dow Jones Industrial Average, and Salesforce CRM was added in. That is crazy because on a total return basis with dividends received, ExxonMobil's up 250% and Salesforce is down 13, almost 14%. And it really goes to show that you need to know exactly how these funds and ETFs function, because you could get caught with your pants down if you don't know exactly what they're buying and how they work and all this and that. So isn't that crazy? Would you have expected that since Exxon got kicked out, it's up almost 250% total return with dividends paid out?
No, I mean, that is crazy. And I know oil and gas, energy in general, but specifically the oil really made a comeback. And I kind of expected it actually, but not at that time. I always kind of had a feeling that it would kind of come back for a little bit, at least spike. And yeah, I know during the last 4 years, it's really come back a lot stronger after being like dead for like a decade. I owned a bunch of oil and gas, and actually sold a bunch of it right before COVID too. And I wish I would have held on to more of it now. But that is crazy. I don't know how. I think the Dow Jones. I think it's also market cap weighted. It's like the top 30 for.
Price. It's price weighted, yeah,
Is it
which
price
is
weighted?
stupid.
Okay.
And I
I'm
know
not.
that
Yeah.
because when Walmart just split their stock. And after the split, they dropped from, I don't know, like number 15 or 13, what they were up there. They dropped all the way down to
Right.
like the mid 20s or 22 or whatever it was, something like that. So yeah, it's weighted by their price, which is just, maybe that worked in 1905, but it's kind of antiquated right now. But I'll start to land the plane by saying that one of my learnings is that I could see my evolution is starting to go more into ETFs, but I'm still looking for those businesses that are just fantastic, excellent, amazing businesses. Like I've been buying Visa lately, and
Okay.
buying those
Yeah.
is like the individual holdings. Some of these outliers, trying to guess which ones those are, but not the bulk of my net worth or anything like that. Because as I've found out, one of my big lessons with like a Leggett and Platt and an AT&T and Verizon is that if you buy a mediocre business and you hold that mediocre business over time, you get mediocre returns. Like it sounds so simple,
Right.
but you can be really dazzled by the high yield. And I don't know if you, like me in my past, I've spent time in gentlemen's clubs when I was a lot younger. My wife always says, too bad you didn't invest that money instead. But the point is that some of these people would look very, very beautiful until you talk to them, you see them in a different light, and then it's like, oh, that's the high yield investing, is that you start to see what's really underneath, and it's just
Yeah.
mediocre businesses that high yields, which are yield traps, can just bizarre analogy. I know. Sometimes I wonder,
No,
like, why,
no, it's
why?
it's
But anyway, so
absolutely
how
no.
do you feel about that with maybe going after great businesses?
Yeah, no, yeah, big proponent. I mean, that's kind of how I started. I used to not invest in ETFs at all, only going after individuals. And ironically, as I've learned more, I've actually sort of now most of my portfolio value is in ETFs, not as much those individual holdings anymore, which I just think is kind of alludes to really the sophistication that's needed to really pick the right stocks. But I do like and will continue to pick those individual stocks that I really believe have good upside, that I understand, have good numbers. I know for me personally, I've been kind of trying to build more of a core portfolio of ETFs where like I said, most of that money is concentrated, toward my goal. Like my goal is, dividend income investor, right? I'm looking for a certain monthly income target that's stable, sustainable. That's my focus and what I preach nonstop on Twitter and Substack and such. But I think once you have a good core portfolio, I think it's definitely appropriate and a lot safer than go say, hey, I've got $5,000 here. Let me make a play on Apple or Microsoft or Nvidia or Tesla. People love Tesla. I love that, and I plan to do a lot more of that. And I think that can really help boost the returns of a portfolio. And if it doesn't work out, hey, it's only 5,000, 10,000 compared to when you have 100,000, 200,000. Now, that's something else. As I've grown the portfolio, $100 used to feel like a lot. I'd get nervous investing that. And then it became $1,000. Okay, I'm still kind of nervous. But now, once you have the understanding and as your holdings grow, now on the scale of $10,000, no problem. I don't even sweat it. Not because I'm a super rich guy or anything, or my portfolio is huge, but just your understanding kind of scales as you grow that portfolio. And your comfort level changes. So yeah, so good. In my opinion, it's good. I like it.
Yeah, and again, you just learn.
You gotta live a
All you
little
can do
too,
is keep learning.
Yeah.
Well, yeah, that's. Oh, believe me, you can't let a little become too much, though. I used to live a little, but a little wasn't doing, so a little became more and more.
Man, we'll have to have another conversation about some of the stuff I used to do and stop. I mean, for a couple of years, I was basically exclusively doing options trading. It was wild, and I don't recommend it, but it was a fun time. But like you said, you're gambling. You that little bit. You want more. You want more. You want more, and it's not good. It's not good, guys. Don't be careful with options. Be very
Well, there
careful.
we go. We had Guns N' Roses, No Effects, Gentlemen's Clubs. You never. Hey, I'm an ex-sailor, okay? I get that privilege, everybody. So you don't like it, hey, fine enough.
Right,
No,
right.
don't. We love you. We love you around here. And again, I'm just gonna end it with what we started with: is that, dude, like you said, when you buy an ETF, you're really buying the methodology that's determining what goes in, what stays in. Because again, if you wanted exposure to Broadcom and a year ago, you looked at. Oh, by the way, shout out to my guy, European Dividend Growth Investor. If you do want to invest in
Oh
SCHD,
yeah,
in the
absolutely.
show notes, he has a really good article on his website from last year, June of 23. And in there, he shares the top holdings. Number one was Broadcom. Fast forward 1 year later, Broadcom, not even in SCHD. So, you
Yes.
really got to understand, and you can't just buy it because, oh, Broadcom's in SCHD. I'm going to buy it. So you have to understand what you're buying. And so with that, you got any last words? Once again, where can people find you? Where can people reach you?
Twitter handle. You can Follow me at Bratto Biz on X/Twitter, whatever we're calling it these days. Bratto Biz Substack, also a link in my Twitter, and then Seeking Alpha. I write under my own name here, Nicholas Bratto, and then you can connect with me on Manek. Also, just under my own name, Nicholas Bratto, there as well.
Hey, before we go, any show you're watching? What's a TV show? What's something non-financial related that you're liking now? What are you digging? What are you all about?
So, me and the wife actually we're getting prepared for House of the Dragon season 2. So we're actually rewatching season 1 to get hype and remember everything that happened from last year for House of the Dragon season 2. So, what about you?
I don't. What is House of the Dragon?
That's the Game of Thrones prequel. Are you a Game of Thrones fan
Oh,
at all?
that's right. Yeah, we watched them all. Shows you how big of a fan I am. I didn't remember what that was. I was
Yeah.
thinking the dragon, like Bruce Lee. Tying in with that, we're watching Cobra Kai. We started watching that, so that's what we're on right now, and working our
Cobra
way through it.
Kai.
And it's okay. Karate Kid stuff. I know I'm a kid of the '80s, so I don't know. Maybe some of you younger people with the younger blood
I've
that
heard
you
of
got
it.
going on there. Heard
I've
of
heard of it.
Karate Kid? God, it was massive. Back in my day, it's so
Yeah.
crazy to say that, but yeah, so that's what we're watching. So good stuff, man. I appreciate it. And everybody, please do check out Nicholas on Seeking Alpha. I have an affiliate link below if you want to get an affiliate, or I have an affiliate if you can't get it. If you want an annual subscription with a nice discount, click that link below. Check out Nicholas's links. And dude, thank you so very much. We will have to do this again.
Yeah, Russ, it was a real pleasure. It was a lot of fun doing this. And yeah, take care. I look forward to connecting with more of your followers, more of the community.
Beautiful. All right, everybody. We'll see you in the next video.